Hello and welcome students to my YouTube channel. Today we are going to start with the subject accountancy. Students till standard 10th, you have not studied what is accountancy as a subject. Now from this year you will be studying accountancy as a subject. It is very interesting and scoring subject and totally practical subject. So you can score good marks in board examination. So today we are going to start with the first chapter of accountancy, that is accounting and its terminology, in which we are going to study the meaning of accountancy, then afterwards the characteristics, objectives of accounting, advantages and limitations of accounting, and the various terminologies of accountancy that will be useful to you while doing the practical sums related to accounting. First of all, let us understand the introduction of accounting. Barter system was prevailing in economy due to absence of money as a medium of exchange. Students in history in SS, you have already studied what was the barter system. It means previously when there was no money invented as a medium of exchange, people used to exchange goods in return of goods. So that was the barter system that was prevailing in our economy due to absence of money as a medium of exchange. In present time, money is used as a medium of exchange. It means because of the invention of money, now to do the any kind of economical transaction in exchange of the goods, we are giving the money. So now money is used as a medium of exchange. For such system where money is used as a medium of exchange is known as monetary economy. It means if we were utilizing the barter system, then we were exchanging the goods in return of goods, then that type of system was known as barter system. And over here, after the invention of money, we are using money as a medium of exchange in return of goods. So this system or this economy is known as monetary economy. So in present time, human being uses money to fulfill his own needs. Previously, before the invention of money, we were exchanging goods in return of goods in order to fulfill our requirements. Now with the invention of money, we are utilizing the money to fulfill our needs or requirements. Transactions, whether are made through barter system or monetary system, are required to record and prepare accounts. It means since ancient times, when the money was not invented and only barter system was existing, at that time also it was needed or required to record and prepare the accounts. So whether it was barter system or presently the monetary system, it is required to record the transactions and to prepare the accounts. Due to industrial revolution and expansion of business, the significance of accounting has increased day by day. Students, we all are very much knowing in history that is industrial revolution took place for the first time in England, and from then afterwards the importance or the expansion of business and trade activities that has developed in our country, due to which the importance or the significance of accounting has also increased day by day. Accounts are record of receipt and payment as well as of income and expenditure. Now what is accounts? Accounts is the recording of the receipt and payment. If by selling the goods you will get the money, so that is receipt for you, and by purchasing the goods you have to make the payment, so that becomes your payment. So during the day or month or a year, whatever the transactions has occurred in the business, whether they are of receipt and payment or of income and expenditure, to record those transactions related to receipt and payment or income and expenditure, accounts are prepared. Now, after understanding the introduction of accounting, let us move on to understand the definition of accounting. You can see on your screen there are two definitions that I have written. The first definition is accounting is an art of recording, classifying and summarizing. It means accounting is one kind of an art to record the transactions during the day, month or a year, and classifying those data, whether they are of receipt transactions, whether they are payment due to that, whether they are transactions of assets or liabilities, then that classification can be done through the accounting only. And summarizing in a significant manner and in terms of money, transactions and events which are in part of at least of a financial character and interpreting the results thereof. Students, we have already understood that accounting only money related transactions or only economic transactions are noted down in the books of accounts, which are in part at least of a financial character. It means which can affect the financial status or position of the business. Only that kind of economic transactions will be recorded in the books of accounts, and from that recording we can come to conclusions or interpretations of the results can be found out. It means at the end of the year we can get the idea about the financial position or the economic status of the business through the books of accounts. Now the next definition is, it is a service activity. Its function is to provide quantitative information. Never it will record any kind of qualitative information in the books of accounts. Suppose the honesty or sincerity or punctuality of any of the worker, due to which the firm is earning a huge amount of profit, but that type of punctuality or sincerity will never be recorded in the books of accounts. Only the transactions which have quantitative value will only be recorded in the books of accounts. Primarily financial in nature, about economic activities that is intended to be useful in making economic decisions. It means any kind of quantitative information or any kind of information that is related to economic activities which is useful in making economic decisions. For example, in any of the business unit, basically there are three types of business unit, that is sole proprietorship, partnership or joint stock company. If in the any kind of business, suppose the joint stock company, in case of company form of organization, there are many stakeholders means, suppose there are creditors, lenders or shareholders, they are called the stakeholders. They want to invest their fund in the firm or they want to purchase the shares of the company. So all that decisions they will take on the basis of doing the survey of the financial position of the firm, and that financial position of the firm, the idea about it that we can get only through accounting. Now, after understanding the definition of accounting, let us move on to understand the characteristics of accounting. The first characteristic of accounting, that is financial characteristic. It means only those transactions which can be measured in terms of money will be recorded in the books of accounts. The second one, that is money as a medium of exchange. We have already discussed that at present, because of the invention of money, now we are utilizing money as a medium of exchange in return of goods. So only those transactions in which money is used as a medium of exchange will be recorded in the books of accounts. Then afterwards, classification and analysis of transactions. Due to characteristic of classification and analysis of transactions of prescribed time can be seen together at one place. For example, what was the opening balance of assets, how many assets have been purchased during the year, how many assets have been sold during the year, and what is the closing balance of assets. All this classification and analysis can be known only through the books of accounts. Next point, that is interpretation of transaction. It means only through books of accounts we can get the idea about the financial position of the business. Suppose the total of income that comes to 20,000 and the total of expense that comes to 15,000, that difference of 5,000, that becomes the profit. It means excess of income over expense. So we can get the idea that the firm is going on in profit. So that interpretation of transaction transaction can be done only through accounting. Next, that is quantitative information. Accounting information only records the quantitative data. It means whatever the information which can be measured in terms of numeric figures only can be recorded in accounting. Next one, that is economic decisions. Already we discussed that in company form of organization there are various stakeholders such as creditors, lenders, shareholders. All are dependent upon the financial position of the business. They take their economic decisions on the basis of the financial position of the business. Last, the point is historical information. It means if the firm is working since last 20 years, then it would have the record of its first year till the last year. It means till the 20th year. That means historical information is available through the books of accounting. Past information is recorded in the books of accounts, so we can easily compare our performance, or our graph can be easily known whether the company is going on in profit or loss. Now, after understanding the characteristics of accounting, let us understand the objectives of accounting. It means for which purpose we need to prepare the accounts, or we need to write the accounts. The first objective is permanent records. No any person can remember how many transactions or had taken place during a day, during a month or a year. So to record that transactions permanently, the accounting information or accounts are required to be maintained, because accounts is always in written form. Either it can be manually written. In ancient times we used to prepare the eightfold red colored book. If your parents might have been engaged in business since many of the years, then anciently or previously the books of accounts were manually written. But nowadays, due to introduction of the computers, the accounting information or accounts are recorded in the computer also. So in any way, the records are being maintained, and that are permanent records. The next one, that is to know the effect of each transaction. It means whatever the transaction that has occurred in the business, what is the effect of that transaction, whether that transaction is cash transaction, whether that is related to credit transaction, whether that transaction is of asset or liabilities, or due to that transaction whether profit or loss has occurred. That transaction details or effect of that transaction can be known only through accounting. Next one, to know influential factors. It means which factors are affecting the financial position of the business or the economic status of the business. That can be known only through accounting. Then afterwards, to determine tax liability. Now you are knowing very well that tax is paid only on the income of the firm. If the income of the firm is can be easily identified through the books of accounts by deducting the expenses from it, so at the end of the year you can get the idea about the income of the firm. So from that income, what would be the tax liability of the firm to pay to the government, that can be identified only by preparing the books of accounts. Next one, that is to know quantum of payables. It means because of purchase, suppose there are two types of transactions, that is cash transactions and credit transactions. If you have made the transactions through cash, then easily the payment is done on the spot only. But if the transaction is made on credit, then immediate payment is not to be done, but after a stipulated time period that payment has to be done. So if you have purchased the goods on credit, then you have to make the payment after some time. So that would create the payables. It would increase our liability to pay that amount. So to know the quantum or the amount of payables, the accounting is important for us. Next one, that is to know quantum of receivables. Same as credit purchase, in the same way credit sales. If we are selling the goods on credit, then the amount will be receivable from that particular customer in future. So to know the amount of receivables also, accounting is helpful. Next one, to measure profitability of business. It means to know the financial position or whether the company is going on in profit or loss. That also can be known only by preparing accounts. Next one, to know the economic status of business. It means if the company or the firm is having more number of assets compared to its liabilities, it means the economic status of the business is sound. But if the liabilities is more of the firm compared to its assets, it means the economic status of the business is weak. So that idea we can get only by the accounting information only, because they are in recorded or written form. Last point, that is to deduct and avoid errors and frauds. Books of accounts are always in written form. So while recording or writing those transactions or printing or mentioning those details in the feeding the data in the computer, we can detect or find any of the errors and frauds. So that errors or frauds can be avoided by preparing the books of accounts. Now, let us understand what are the advantages of accounting. The first point, that is availability of accounting information. Already we discussed in the objective that permanent records are being maintained because of accounting. So if we want to make a survey of the last 5 years data of our business, then we can easily get through the accounting information. Next one, that is to know profitability, that is to know whether the company is going on in profit or loss. That idea we can get only through the books of accounts. So the objectives and advantages are almost similar to each other. To know financial status, it means to know the economic status of the business. If the assets or the receivables of the company are more compared to its payables, it means there is a sound position of the business. But if the liabilities or payables of the firm are more compared to its assets, it means the financial status or economic status of the business is poor. So that idea we can get only by books of accounts. Next one, that is tax planning. Planning of tax can also be done only by preparing the books of accounts. We are very well knowing that on the income only tax is to be paid. So from the income, by deducting the expenses from the income, whatever the net income remains, on that the tax is payable to the government. So if the amount of income is more, then naturally the tax would be more. So that all depends, or that idea is to be taken on the basis of the accounting only, that how much tax is payable to the government. So planning of tax also can be done, or idea of amount of tax payable can only be available by preparing the books of accounts. Next one, that is valuation of business. The idea about the position or the value of the business in the market can also be known through the accounting only. Suppose the seller, or suppose the owner of the business wants to sell his business. At that time, this books of accounts or accounting information gives the idea about the financial position of the business. If the financial position of the business was sound since last few years, then the valuation of business would be more and he would get more price for his business. Next is decision making. Decision making, it means important decisions can be made related to the firm on the basis of accounting information only. Next one, as an evidence. Suppose in the business there are 3 partners, and any kind of reason, due to any reason, the dispute has arisen between the partners. So to solve that dispute among the partners, accounting information can be useful as an evidence. Next one, that is comparison with past operations. We've already seen that historical information is recorded in accounting. So if we want to compare our data with the past years, then that can be easily done with the books of accounts, because it is the written form or written record of the entire life of the business. Next one, that is moral control. We have already understood that whatever the accounting information that would be in written form, so there would be less chances of errors or frauds for the employees. So the moral control will be maintained of the employees. Next one, that is last but not the least point, that is corrective measures. It means any of the corrective measures can be taken through the help of books of accounts. Suppose any of the decision in the last year which we had taken, because of which the firm has gone in loss. So in future, when while preparing the books of accounts, we have got the idea that because of this particular decision the firm has gone in loss. So in future we can take the corrective measures or steps so as to avoid the loss for the firm. So this corrective measures can be taken only through the medium of accounting information. Now, after understanding the advantages of accounting, let us understand the limitations of accounting. Just as coin has two sides, in the same way as there are advantages of accounting, in the same way there are certain limitations of accounting also. The first limitation or disadvantage of accounting is non-financial transactions. In accounting, only those transactions which can be measured in terms of money or only financial transactions can be recorded. Suppose the honesty, sincerity, or punctuality of the employees, because of which the firm has earned any kind of huge profit, then that cannot be mentioned in the books of accounts. So this is one of the limitation of accounting. Second one is stable value of money. Accounting assumes that value of money is stable. For example, an asset that was purchased before 5 years at rupees 50,000, if replacement is required, it means if after 5 years we need to replace that asset, then in this case more than rupees 50,000 has to be paid to acquire the same type of asset. But natural, before 5 years whatever the asset that we had purchased, after 5 years if we want to sell out that asset and purchase the new one, then naturally the price would be more compared to what we had purchased before 5 years. So accounting assumes that value of money remains stable. It means in books of accounts we will always be recording the value of that asset at rupees 50,000. Even after 5 years the value of that asset might have increased, but according to the limitation of accounting it will record the asset at its actual price or at the purchase price. So this is also one of the limitation of accounting. The third point, that is historical transaction or events. In accounting, historical transactions or events are recorded. It means past information or past transactions are recorded. No corrections are allowed in transactions for any mistakes. It means any mistakes had happened, then we cannot rectify those mistakes once it has been recorded. But still historical transactions and events are useful. These events or historical transactions are at most helpful to us in taking the future decisions. So even though it being a limitation, it is also helpful to us in taking the future decisions. Next point, that is avoidance of market value. The value of assets, we are knowing that it keeps on changing with the passage of time. Their market price keeps on changing. But in the books of accounts, we are writing those assets at its actual cost only. We are always ignoring the market value of the asset. So that is also the limitation of accounting, because we cannot get the exact idea of the economic status of the business if the market value is not recorded in the books of accounts. Next one, that is use of estimates. In accounts we are considering items like bad debt reserve. Now what is bad debt reserve? Suppose we have to receive certain amount from any of the customer. We have sold the goods on credit, but that person has not paid the amount in due time limit, and he has declared himself as insolvent. So that amount will not be received from him in future. So that is called as bad debts. It means it is one kind of loss for the firm. So in business such kind of loss might occur. So to bear that such losses and in future it will not affect to the financial position of the business, so certain amount of reserve we are creating for bad debts, that is called bad debt reserve. So that bad debt reserve estimate may prove wrong also in the particular year. So limitation of accounting is that use of estimates while we are estimating some kind of reserves. Next one, that is last point, dual standards. There are two important components of accounts, that is profit and loss account and balance sheet. Now in profit and loss account we are recording the transactions at its current prices, while in balance sheet we are disclosing the historical price or the actual price. We are not recording the market value of the assets. So different standards are applied in both the P&L account, that is profit and loss account, and the balance sheet. So these are the limitations of accounting. In spite of having these limitations, accounting has very practical and important role for owners of business, for government and other stakeholders like investors, creditors or shareholders. These limitations can be overcome in the development of accounting. So these limitations can be removed because accounting has been developed at a very great speed. So by ignoring these limitations, it can be overcome with the passage of time. So on the whole, it is very useful for each and every person that is concerned with the firm, whether it is the business owner, government or any of the stakeholders. So that's all for today, students. Thank you. Have a nice day. Goodbye and see you in the next video.